What's going on, guys? Hope you're having an absolutely fantastic day. And if you're a shareholder of Alibaba or Chinese stocks, I think you're having a great day, right? So Alibaba is up about 8% trading in the Hong Kong market. So I want to talk about what is causing this Alibaba stock to surge and also how we should be thinking about this surge, right? So let's start off with the news first. Jack Ma's Ant wins approval for 1.5 billion capital raise. So Hangzhou government will become the second biggest holder, right? So now we know that the government is actually aligned with Ant, somewhat aligned, and also their objectives, right? Because if the government takes a stake, of course they don't want to lose money, because more than the money losing part, I think they don't want to lose face, right? They don't want to say we invested taxpayer money and then they lost the money, right? So let's just read through this. Chinese regulators approve a plan by billionaire Jack Ma's Ant Group to raise 10.5 billion yuan, so 1.5 billion US dollars for its consumer unit, signaling progress in the government ordered overhaul of the financial technology firm. So I'm not going to read through the whole thing, but basically the gist of it is the government is now allowing Ant to raise money, right? And think of what are the implications, right? If you allow them to raise money, means there is a pathway to Ant IPO, right? Which in the past has been the peak of Alibaba, right? If you remember when Alibaba was at $300, it was all this talk about the Ant IPO, oh, how many hundreds of times oversubscribed or tens of times oversubscribed, and then they torpedoed the IPO, and then basically it was all downhill from there, right? Until we hit the floor of, I think, $58, and now we are sitting at around $92 at yesterday's close. But if this price holds up, then it'll be $97 or $98 when it opens, right? So, according to a notice on 30th December, Ant, which contributed 5.25 billion yuan of part of the plan, will control half of its shares after a deal, right? So while a unit owned by the city of Hangzhou will hold 10%, becoming the second biggest shareholder, right? So the deal resolves a key hurdle for Ant as it seeks to meet requirements from regulators following a crackdown on its business after its record initial public offering was torpedoed in 2020, right? Something I just talked about. The green light is another sign that Beijing is softening its stance on its giant internet sector, right? So I would have put it as internet giants. Traditionally a big driver of growth as the world's second largest economy sputters, right? So basically what this article is saying is that due to weak economic growth, right, and you can see the pressure is really getting to the Chinese government, and I'm very, very glad, as I said in the past, right, that they didn't take this the wrong way, right? Because you can remember that the reason that they stopped all these lockdowns is because people were protesting, right? And they could have gone a very, very different route and, you know, made China basically really, really uninvestable, right? But we're not going to explore that today, right? But basically, what this plan really tells you is that China is there to support its businesses now, right? They have shifted their focus from, containing the virus to now, okay, the virus, whatever, the rest of the world is already living with it. I think we need to focus on economic growth, because basically you have to realize that if people are, locked into their house, they will start to have a lot of thoughts, right? And I don't want to become a tinfoil hat or conspiracy theorist, but when people think negative thoughts and all that, they tend to do stupid things and also protest and all that, and that is not something governments want, right? So we are seeing the opposite effect of 2020 October, where basically this was the part where, an IPO got cancelled, then more restrictions, lockdowns, everything coming out, Alibaba getting fines and all this, right? So we are seeing the reverse play out now, right? There is stimulus, there is curbing of all the lockdowns, no more lockdowns. There is support for, all these companies, privately owned companies. So you can see that now it's the opposite effect, right? So what will it do to the stock price? Hopefully it's the opposite of this, right? And we go up instead of down from here, right? But who knows, right? But another point I want to talk about is actually the price itself, right? So some newer stock investors will look at the price today and say, oh, it's up 8%. How can it continue going up? I better sell today, right? And this is just my opinion, right? So we don't know when is the perfect time to sell, right? But you all have to decide for yourself that what is a cheap valuation, right? Let's say if you say a company that can grow, let's say 10%, you will give it a 20 PE. These are just imaginary numbers, right? So you say that just because this company is Chinese, I think I only give it a 17.5 PE, right? And we're using PE as a proxy, right? So you have to decide yourself what is your margin of safety and when you sell, right? Because some people might think that oh, it's up 8% today, means it's become expensive. And in the past, I've also fallen into this trap, right? So I also want to use personal experience as a talking point, right? So again, everyone has to decide on their valuation, whether it's cheap or not, whether it's cheap for Chinese stock, whether you think Chinese stocks are any different from American stocks. That is all up to yourself, right? But at this current point, I think Alibaba, if my math is correct, is trading at about 14 or 13 PE. So to me, it's still quite cheap, especially if the growth can come back, right? So it's another factor if the growth doesn't come back. And this is something that we need to see next year, right? Maybe we have a gigantic spike because China reopens. Who knows, right? So again, something to think about, and I think something to spend a lot of time really thinking about, right? So we do have to look at our investment alternatives also, right? Let's say you're very bullish on Tesla and you think Tesla is the right valuation today. It's down 10%, and you can see Alibaba stock is up 10% in the past 2 days, right? So the difference there, if you sell Alibaba stock and you buy into Tesla stock, you can get more shares or whatever it is, right, than 2 days ago, right? So that is my point, right? I'm not saying that Tesla is cheap or Alibaba is expensive. Don't get me wrong, right? Because I think these things are things that we have to figure out ourselves, and the market is just there to facilitate all these trades, right? So that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button, and comment below, right? Do you think how long do you think Alibaba can continue surging like this, right? So this is just for fun, right? So maybe we can just take guesses and then we'll see who's the most accurate, right? So yeah, with that being said, have a fantastic day ahead and peace out.